So, Steve Weiss, I'm wondering how you view all of this, given how negative you've been on China and the Chinese stocks. You're still short Alibaba, Bilibili, Pinduoduo. You have a short position in the Qs. You have about 30% cash. So what do you say about where we are today, what this story means in the bigger picture?
Well, look, my theme has been the market is now looking at, investors are looking at the market now as being half empty, so to speak, versus half full, where every benign, event was regarded positively and took the market up. Now we're turning that with just a series of negative catalysts and no positive catalysts. I'm not sure that the Evergrande is that big a deal on the top line. Definitely not to financials. You have hedge funds and long onlys that do own the paper, unless they've sold it because it's going towards bankruptcy. And if you paid attention to China, you knew this has been happening for months already. However, where the contagion is, make no mistake about it, is in the commodities. So we've already seen China cut back on steel production, but you've got the largest property developer in China that now is not paying its bills. So suppliers are back on their heels. They need that cash. And you've got credit tightening for the other property developers. So that backs up into what they need. That's why we saw iron ore break below 100 on Friday. We're seeing copper come down. Steel's held up there, but that's going to come down. Not just one commodity moves. They all move in unison. There may be lags, but they all move. So that's why you're seeing it happen. Look, Evergrande actually was a little bit of a cherry on top of it, tipped the scales a little bit today. Where people say, I got to get worried. Plus, then we've got the Fed on Wednesday. So we've got potential for a number of negative events. And so that's why I've been negative. I'm not ready to put money back in the market yet. I've cut back a lot of positions in addition to selling some. I think you'll get a better opportunity to deploy capital.
So, Shannon, there are those who are out today defending the market, calling it a buying opportunity. Kramer, for his take on it, says it might be a little too early to do that. You sold Alibaba last Thursday. How do you see things today?
Well, just to be fair, I mean, we've spoken about the stock many times over the last several months. The reason we bought Alibaba last year was that we felt like they had put an incredible amount of spend into expanding into their adjacent markets. And now we feel like not only have they not been able to execute on that, we're also seeing this regulatory overhang on their cloud and fintech businesses, which obviously were where we thought there was undervalued opportunity there. As we go through the next couple of months, I continue to look back and think about the enthusiasm we've had in the material space, in some of these very pro-cyclical epicenter stocks. I think there was a lot of run-up, to Steve's point, not just on the China trade, but also on the infrastructure trade here in the United States. And there's still some opportunities here. But I do think it's a bit early. We were looking for this swoon, Scott, back in August, and we didn't get it. We had a really strong August, and I think a lot of people expected this to be a 2-month sort of choppy market. So if you look at the catalysts over the next couple of weeks, we got the Fed this week and another number of central banks, the BOE, the BOJ, and we don't have a lot of positive catalysts, to Steve's point, to really fall back on. And so we might get, another couple weeks of trending down. Valuations look toppy. But I think if you're looking at barbelling your portfolio and thinking about what's going to do well, I disagree with being short the Qs. I think you should be moving into tech. And I think that that's going to be where you're going to find some additional momentum as we go over the next couple of months or so.
Unless, of course, you think that the overall market is going to continue to have an issue, and then technology stocks are going to be a place that you're going to see money moving out. I want to move on to the others. But, Steve, I'll give you a chance briefly, and I mean briefly,
right,
to respond to the specific move you have in the Qs to what Shannon just said.
Yeah, the Qs were a hedge because I've got Q exposure. So I've been negative on the market. I didn't want to take gains and sell everything. So I bought the Qs purely as a hedge. It's not a long-term play. I came in short them. I added a little bit to the short side on them, but I'm not going to be there. If I'm there for another day, it's going to be a long time.